Good afternoon, everyone. I'm Alina Islam, and I'm a mining analyst here at Red Cloud Securities. Thank you very much for joining us today. I'm very excited to present Latin Resources to you, a lithium developer focused on advancing its Salinas Lithium Pegmatite project in Brazil. To talk about this highly prospective project, as well as upcoming plans, we have with us Anthony Greenaway, VP Operations of the Americas. I know you'll have many questions after the presentation, so please put your questions into the chat box and we will try to get through as many as we can. But before we get started, I do need to mention the fine print. For Latin Resources, there may be some forward-looking statements made on this webinar. Please read the cautionary note on page 2 of the Latin Resources corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Latin Resources specific disclosures. And with that, I'll hand it over to you, Tony. Please take it away.
Great, thanks very much. And look, thanks for the opportunity to present today. It's always good to get in front of people, even virtually, to talk people through the project and update people as to where we're at. Obviously, we're very busy with the project at the moment, so we're getting towards the back end of the feasibility study that we currently have underway on the project. So this presentation is really designed to give people an update on where we're at with that, as well as a bit more background on the project and where we're sort of going in the future. So look, as you mentioned, we're operating, or we're about to start operating, hopefully, this project in Brazil. It sits sort of just in the very edges of the state of Minas Gerais, which is a very well-known and very strong mining district. There's 300 over operating mines in the area. It's a very big part of Brazil's economy. It has very good infrastructure with hydro-backed power and good water facilities, etc. We have dams very close to the project, so we have no issues with that. We're right near a major highway and quite close to a large port as well, in the port of Ilhéus. So from an infrastructure perspective, we're very well positioned. You know, from day one, having been on this project, there were no red flags raised for me in terms of that infrastructure. You need to go and build a mine. You know, obviously, when we first started, we didn't know what the resource was going to grow to, and you know, people should know by now that this is a fantastic resource that is, you know, in the world-class district. It's the largest single lithium project and deposit in Brazil, and certainly the economics of this are standing up very well. Just to give you a bit of a look through into why we're into Brazil. You look at things like corporate tax, you know, government royalties, wages, and electricity prices, and you can see Brazil is significantly lower than, you know, countries like Australia and Canada. And it's these type of things that really help the economics of the project when we sort of run through things. You know, corporate tax is a big thing to have. You know, 15% corporate tax in Brazil. You know, 2% government royalties. And significantly lower average wages in Brazil really help, as I said, those economics. So our operating costs are a whole lot lower. Electricity prices, especially, you know, with Brazil being, you know, very, very low in terms of power costs. It's all hydro-backed, so it's green. So these are the sort of things that made us really, you know, draw an eye on Brazil and are really helping, like I said, the economics of the project as we take it through the feasibility study. One of the other things that's really very strong in Brazil is the government's support for new and emerging companies like Latin Resources. The Lithium Valley in Minas Gerais, the launch of that at NASDAQ a couple of years ago was very strong with Governor Zema. You know, backing that, and he's been integral in everything that we're doing, working with the government bodies, groups like Invest Minas, etc. So these sort of the support that we get at the ministerial level is very strong, and you don't really see that anywhere, certainly not in places like Australia. You don't see that level of government support, and it's really encouraging because they're looking at upgrading roads, they're looking at upgrading airports for us, well, not just us, but everyone in the region, obviously. But they can see the benefit of a new operation coming into production, so they're looking to help us in any way they can with additional infrastructure and things like that. So that level of government support is fantastic, and we're engaging with those government ministers at the government levels within Minas Gerais on almost a weekly basis to look at our permitting and make sure that we're all on track for those sorts of things. So government support should not be underestimated, nor shouldn't be undermined in terms of how important it is for us and what sort of a benefit it is for us as we go forward. As I said, the project really has grown from fairly humble beginnings back in December 2022. We put out our first resource there, and it was sitting around sort of 13-14 million tonnes of mostly inferred material. And you can see we've steadily grown that up until May this year, which is we're sitting at, you can see there, 70-odd million tonnes, with 67 million tonnes of that sitting in the measured and indicated JORC classification. And it's really important to be up in that measured and indicated. It means that's then available for us for conversion to reserves as part of the feasibility study that we're doing. And it's really a testament to the work that my team has done on the ground. The drilling contractors and the labs and all of the people that are supporting us there have really sort of added benefit to us, and that's what's really so strong about this resource. It's very well behaved in terms of its geology, it's very consistent in terms of its mineralization, and all of those things sort of factor across into SGS's classification there. So to have 67 million tonnes out of the 70 sitting in measured and indicated is fantastic. And as I said, it really opens up scope for us to then see a very high conversion across into reserves as we go forward. The grades there you can see are very good as well. We're sitting at 1.25% globally for the project, nearly 1.3 for the measured and indicated. So again, very high grade deposit. It's very clean mineralization. I'll talk a little bit more about that as we get into the presentation. But we're still growing this resource. We've really only focused on Kalina. We have another maiden resource down at Fog's Block. You can see it's sitting there about 7 million tonnes at just under 1%. There's only about 15 holes into that deposit, so it's very early days for that. We've just recently been drilling the Planalto prospect, and you can see it on the map there, just to the southwest of Kalina. That's another very exciting prospect for us, and we've just been releasing some very high-grade results from that. And we're looking to put a maiden resource out there probably around the end of August into September, and that's really growing our resource base again. You can see in the highlights there, we're aiming for something over 100 million tonnes here. We think it's important for us to get to that level, because then it supports a base of us producing up to 1 million tonnes of concentrate per annum, and that's where we see you need to be a real global player in this market, in the lithium market. So if we can get to the resource base to that stage, we can then look at scaling up our operations to really put ourselves into that tier 1 operator, which is where we want to be. This is just a bit more on the resource itself at Kalina. You can see there that there's a series of stacked pegmatites, dipping off to the east. The project is, this deposit is still open at depth. Some of the thickest and highest grade intersections are at depth, and that's still open. It's still open along strike as well, and you can see sort of on the left-hand side of the screen or the images there, the start of what we think is the Planalto mineralization that links up towards Kalina. So there's still a lot of potential to grow this resource. We've got about 300 holes into it at the moment, nearly 100,000 meters of drilling. So this is all diamond drilling, by the way. It's all fully oriented, and that's again leads to why we have such a high degree of that resource sitting in the measured and indicated, because the quality of the data here is very good. We have I think 6,000 or 7,000 structural measurements here, so our understanding of this ore body is very good. It's very strong, and that relates across into the mining parameters as well. So we know what to expect when we get mining in this thing. So again, we expect to see a good conversion across from that 67 million tonnes into the reserves, proven and probable reserves as part of the DFS. We're still working through that at the moment, but as I said, we expect to see a fairly strong conversion rate across into that. Metallurgical test work is completed pretty much for the deposit. We've done a lot of work through SGS up here in Lakefield in Canada. I think I've put through probably close to 4.5 tonnes of material through this lab. This is the DMS circuit up at Lakefield. And the results that have come out of that have just been fantastic. You know, we're getting significantly higher recoveries than you would see globally, and that's because of the mineralisation we see at Colina. And that being that all of our lithium credit comes from spodumene. It's a very coarse-grained spodumene, so sort of 25 to 30 centimetre crystals on average, and they're very sort of euhedral. So that means when you crush the material, you get very good liberation of the spodumene from the waste material, so that you get again those very high recoveries of the lithium through this very simple DMS processing. So that's what really makes this deposit stand aside, or from our peers, in that the metallurgical recovery is very good, and the product that we generate at the end of that is very clean. And you can see a picture of the concentrate in the bottom corner of the slide there. Essentially, it's all spodumene in there with a little bit of quartz and feldspar that gets caught up, and a little bit of mica. But generally speaking, this concentrate is very, very clean, and that's certainly flowing through to our discussions that we're having with our offtake or potential offtake partners at the moment, because of the low iron content in this material, the low sulfur content, and the low mica that we have. There's a lot of interest in trying to secure this product simply because it is so clean. This is some of the comparisons of that. You can see the ore in the drill core there. That greeny sort of colour is the spodumene crystals with quartz and feldspar. Overall, again, you can see the grade of Colina sitting at 1.3% in the measured and indicated, where the global average is sitting around 1.1. And whilst 0.2% might not seem much, it certainly is significant when you look at the conversion of that across into downstream processing. But what really sets it aside, as I said, is the coarse-grained nature of this thing, because we can recover so much of it through that very simple DMS processing. And again, you can see the comparisons there for the iron and mica content to our peers on a global sense. So this is what sets this project apart from others, and we think so it certainly elevates it above them all. Is the grade and the impurities, or the lowness of those impurities that are in our concentrate at the end of the day. And as I said, that's really sort of flowing through to the very keen interest from offtake partners to secure this product, given that we are going to be producing a significant amount for quite a long period of time. That stability of good, clean, stable concentrate product is certainly something that's very attractive to the offtake partners. This is just a bit of a snapshot of the conceptual design. You can see the open pit. It will be staged through there, over the mine life. ROM pads and process facilities just to the south of that, and then waste dumps obviously sitting around that. So this is obviously still conceptual. It's at the DFS level, so it's fairly well designed now, and we're just going through final value engineering, etc., as part of the feasibility study. But it's going to be a very simple open cut operation. Nothing difficult about this at all. The grade control, etc., we'll get into that sort of drilling as we go, but very simple blasting and shovels, etc., out of the open pit. We're looking at optimizing haulage roads, etc., as you could imagine. We've done a lot of geotechnical work around the edges of that pit there to make sure that we are being conservative in our models, to make sure that we don't end up with slips and rockfalls, etc., things like that in the pit. So there's a lot of conservatism built into that, and still comes out at a very robust amount of material that we can take out of that. So certainly we are erring on the side of caution in everything that we do, which means we have a conservative model, so there's plenty of upside as we go forward into mining. As I said, this is very simple processing. We're using DMS only processing at the moment, so no flotation in the process flow sheet at this point in time, and that's simply because we get such high recoveries through that simple DMS. We do lose some, obviously, to the fines, and we'll look at that downstream processing potentially at some point in the future. But where we're sitting right now, we don't need to look at that, and we'll stockpile that material for potential further processing in due course. But you can see there's just simple three-stage crushing, scrubbing, and feed preparation. We do have an ore sort, which is that number 5 building you can see there. We've put ore sorting into the mix because that makes a significant difference to cleaning up the feed that we put into the DMS. So whilst we do get very good liberation of our spodumene through DMS, because the densities are very close, you do get some feldspar and quartz material going through into the DMS feedstock. So that ore sorting just removes that. So we take that next level of waste material out, and that's really to safeguard us more so against the mining. These are a series of stacked pegmatite lenses that we have here. There's up to 19 of them that we're modelling. So you're always going to include dilution, in that. We're doing that as part of our mine planning. But on a bad day, if the blast goes not quite right, you might end up with more waste material than you want in that feedstock. So that ore sorting is there to help clean that up and give us a bit of a comfort factor for the mining. So to make sure that we're getting a nice, consistent, clean feedstock into that DMS processing plant. This is our PEA numbers that came out in Q3 20, a while ago now. This is really the benchmark for where we're looking to get to. You can see this is a very robust project at that level. Bear in mind that we have now 67 odd million tonnes in the measured and indicated. This was based on about 26, 27 million tonnes. So you can see we've upped significantly the amount of material that we're looking to be available for the full feasibility study. What that will do is it'll push that mine life out. You can see it's already at 11 years at the moment at that 1.5 million tonne per annum throughput. So we won't be changing the throughput in the first few years. So what that'll do is it'll extend the mine life. The all-in sustaining costs of $536 a tonne, again, are what really make this project so robust. Even with the depressed lithium prices as they are at the moment, we're sitting in the lower quartile of potential producers here. So that again gives us a good buffer. That means we can weather those storms of low concentrate pricing. And again, that's one of the things that's been really attractive for this project for the offtake partners, is that the other, when we do have low cycle costing or pricing for spodumene concentrate, we're not going to have to shut down like some of the higher cost producers are in Australia at the moment, where their costs are sitting up around about that $1,000 a tonne. So it means that we are, like I said, really quite robust in terms of long-term stable concentrate production. The payback period, again, will change. We are changing a few things from this PEA. The CapEx should remain roughly the same. We have put ore sorting into that, so that will increase it a little bit, but we're expecting that to be in that same ballpark, and the all-in sustaining costs, again, to be about the same. But we are working on those to try and reduce that a bit more if we can. Infrastructure I'd sort of touched on at the very beginning of the presentation here, but infrastructure in Salinas is very good. The main highway runs within about sort of 6 or 7 kilometres from the project as the crow flies, or about 10 by road. So once we're onto that, it's pretty much a straight shot through to the Port of Ilias, which you can see in the bottom corner there. That's the port that is closest to us. We've been out to that port. There is capacity there for us. And they are very keen to look at securing a product like this to go through the port. So again, all of those things really help us in terms of building infrastructure. We have a hydro power hub just near the port, or just near the town of Salinas. So we're looking to build a power line off that. We have a dam for water just north of the town that we can access water from. So water for processing is no problem for us. Power supply via the grid, the hydro-backed grid, is very close to us as well. So our PEA puts all of those things into into what we're going to be doing. So all of those costs, etc., are built into that. Environmental social governance is something that we do take very seriously at the company. It's something that I've been involved with and initiating from the day one when we started going out and doing our exploration drilling in 2022. We are a very strong part of the community in Salinas. You can see some of our guys there talking to, not too sure why that's sliding backwards and forwards. Sorry about that. You can see some of our guys who are active in the schools, educating people on the what the project is going to look like, what the potential for new things is going to be, new projects, etc., and new jobs. So it's a big part of what we're looking to do. This is just a bit of a snapshot. This is again from our PEA. You can see a breakdown of the capital costs there. One of the big costs obviously is mining pre-strip. We're looking to reduce that through a staged pits and mining. So we think that will probably reduce a little bit. As I said, we have put in ore sorting, so that's not in this this costing at the moment. So we said you can take these with a bit of a pinch of salt. They will change a little bit as we go into the feasibility study, but we do not expect them to be significantly impacted or grow significantly. Similarly, with the all-in sustaining costs, it looks a little bit lumpy in that graph at the top there, and that was simply because of what we could access as part of the PEA. We expect that to sort of smooth itself out into a more realistic operating profile as we go through. But again, our all-in sustaining costs of 536 is what we're targeting to maintain. As I said, we are looking to try and reduce that a little bit with various trucking and mining things that we want to do. So we'll see how we go with that one, but we're not expecting that to change too much at all. This obviously should be known to people on the webinar. Sigma Lithium is I guess our the shining star for the region. This is what we're looking to mimic or do better. Personally, I believe that the ore body is better, for a number of reasons that I've outlined. But certainly what Sigma shows us is that you can build these projects very quickly and very efficiently in this part of Brazil. And certainly it's a good roadmap for us to go forward. In terms of offtake discussions and where we are very well positioned to be looking at selling our concentrate into the US and Europe. It's right on our doorstep, obviously. We are looking at, we're engaging with a number of groups globally. That's all still in train at the moment. But those discussions have been ongoing and are certainly progressing very well. But certainly the USA and Europe are very favourable prospects for us simply because of the savings in shipping costs and things like that. So that's, they're all ongoing and we'll release those obviously when we can. In terms of the feasibility study timeline, we're well and truly on track for where we said we were going to be. So we're looking to have our feasibility study finished this quarter around the end of September. Certainly things like our offtake process, as you can see there, are still ongoing. The feasibility study finishing off, as I said, around September, October. And we'll have that out at that sort of stage, the end of this quarter. Environmental permitting is still on track. That's obviously one of the big milestones for us. But again, with the support that we have through the government of Minas Gerais and Investments, etc., we believe we're still well and truly on track to deliver those later this year. Development license again sort of flow in from that. So again, we're expecting those later on this year. The funding process is something that's, I guess, running in parallel with the offtake partners. I'm sure there'll be some components of that linked to that, but that is an ongoing process for us. Even in this depressed market for spodumene, we don't see there's going to be a problem with that. It's not a great deal of capital to be raising on the back of such a project like Colina and like the Salinas project. Final investment decision for the board is still on track for the end of this year, so we can start construction in the beginning of 2025. And again, using Sigma as a bit of a goal for us going forward, we look to be in production around mid-2026. And we are, in fact, doing a bit of early works at the back end of this year, things like power line, upgrading the access road, etc. Will be done this year, and we're budgeted for those. So just to make sure that, again, we've got a bit of leeway in that build time in 2025 to make sure that we hit that production profile in 2026. Just a bit of the board and management you can see here. Peter Oliver, obviously instrumental in what we're doing. He's part of the development committee that I sit there with him and the other operational guys in the project, just to make sure that we keep this project on track, but driven obviously with Chris Gail at the helm, with David, Brent, and Pablo obviously supporting him at a board level. Corporate overview, we've come back a little bit from this sort of in the last few days, but we're still out of a market cap sitting around about 400 odd million. We've got about 20 odd $million in the bank at the moment, so we're well funded, certainly all the way through to the end of the studies that we're looking to do. We're quite liquid in our stock. You can see that we have quite a bit going through there. So, you know, the support from our larger institutional investors is still very good. We can communicate with them regularly to make sure that everyone's happy and still on board with what we're looking to do. So it's certainly good to have the support of those guys, Regal, Waratah, BlackRock, etc. So I guess just in summary, we're looking to be a low-cost operation. Certainly, you know, around that $500, $530 odd all-in sustaining costs CIF for China. This is conventional DMS processing only, dry stack tailing, so there's no wet tails here. We're pressing everything and filtering everything, so it's dry stack, probably co-storage. There's tailings within the waste rock dump. Hydro-packed power, which means it's very clean and it's very cheap. We're recycling as much water as we can out of the DMS processing. So you do obviously lose a little bit, but we're recycling as much as we can. So our water draw from the local dam is minimised, and obviously low capex of the phase one sitting around there at 253 million against a project that is as strong as it is. As I said, we don't see that we're going to have too many issues funding the project as we go forward. And that's about it. I've got nearly out of my time. So hopefully. You know, that's enough for everybody and give everyone a bit of an update. I do see one question sitting in the messages there. Do we have other minerals? If you're looking at other minerals for byproducts, no. This is an interesting pegmatite. We don't have any other lithium minerals in there. We also don't have tantalum or anything like that in there either. So this is spodumene only. So it's one of the reasons why this is or behaves so well in the DMS, in that it's a very, very clean pegmatite ore body with quartz, feldspar, spodumene, and a little bit of mica. But all of our lithium coming from spodumene, which means we recover it. But obviously, without things like tantalum, we don't get credits from that, obviously. But it means that our pegmatite is very clean and the processes very well.
Tony, I think there are a couple of other questions. I'll just follow up to that one. Do you have any institutions that follow you?
Yeah, well, obviously, Regal is one of our biggest institutional investors. We do have a number of others sitting there on the register. I know Macquarie certainly follow us in terms of putting out papers, Red Cloud as well, obviously, and Pac Partners in Perth as well, I think, do some reporting on us. So yeah, we do have a number of groups that are following what we do and publish regularly on the project, and we obviously keep them abreast of what's happening with the project as well.
A question on the permitting, Tony. So when do you expect the construction permit for Salinas?
Yeah, so the way that the processing or the permitting works in Brazil is that we've got a fast track permitting process. So we've already gone through we've collected all the data that we have to collect. We've made all the submissions that we have to submit. The government bodies have been out to site and done their site inspections, etc. So all of that's pretty well done. We've had no red flags been raised at this point. So we're just sitting in the period now where the government is compiling all of that data and including the work that they did on site, where they do their own independent studies. And that includes as well going and talking to all of our communities. And we're really pleased with the feedback we got back from the government bodies in that the communities all around us are very supportive of the project. And that's really part and parcel of the work that we've been doing from day one to engage with those groups. So that is pretty well, done from what we can do. We're just waiting on the government to get back to us. We are expecting to get our environmental license coming through, certainly I think in end of Q3, early Q4 of this year. And then the construction license sort of folds onto the back of that. So they sort of run parallel. They wait for one, then the other one sort of pegs off the back of that.
Okay, a question here on Planalto. So is there a chance to have continuity from Colina to Planalto as one huge deposit?
Oh, look, that's a really good question. And, I'm an exploration geologist at heart. So that guy in me says, of course, but the reality is there are some structures running through there. So whilst we do have indications that the mineralisation is consistent all the way through there, we haven't drilled. There's about I think a kilometre or so, 1,200 metres where we have no drill holes at all. So it's a bit, we can't say that it's definitely in there, but we're certainly, Colina, the mineralisation is open to the southwest, and Planalto is open to the northeast. So we will eventually get to fill all of that in. Is it part of the one mineralising system? I think the answer to that is probably yes. It's the pegmatites of Planalto a little bit sort of flatter lying, and do have some subtle differences in terms of the mineralisation. But generally speaking, it looks to be part of the same mineralising event. Planalto has the same very coarse grained spodumene only, quartz feldspar, a little bit of muscovite makeup for the pegmatite itself. So it looks very similar. As I said, there are some subtle changes in there, and we think that's probably late stage alteration around structures, and there are some structures sort of sitting between the two deposits. So whilst yes, I think it's part of the same bigger system, I don't see that we'll end up with one massive open pit running all the way down. I think probably what we'll have is the Colina pit, and there might be a satellite pit sitting at Colina, at Planalto to the southwest.
How close are you to announcing an offtake?
Oh, that's a good question, again, and it's one that I really can't be drawn on. I'm not part of that offtake process. That's closed doors at the board level. I know those discussions have been ongoing for some time, and they're very positive, but it's very difficult for me to answer that one. I'm sorry. Okay.
Is there a plan to produce both the carbonate and hydroxide products locally?
From our perspective, it's not in our feasibility study at the moment. We're looking at concentrate only, but certainly I know that Governor Zema and the Brazilian government are looking at partnerships, potential partnerships with secondary products downstream processing. It's certainly not something that we're involved with, but we certainly are aware of some third-party discussions that are going. There is carbonate produced in the Lithium Valley there. We're also getting some sulfate produced by another company as well that's shipping that off to Europe. So there is certainly third party or downstream processing products in Brazil already, albeit at a smaller scale. But certainly there's a want from the Brazilian government to get involved in that. From where we sit right now, we're looking at a simple open cut mining operation at the moment to generate or produce a spodumene concentrate, but not that we rule anything out in the past through maybe partnerships, etc. But right now it's not part of our study.
In the DFS, are you looking at a phase 3?
No, not as part of the DFS. No. So the DFS at the moment has stage 1 and stage 2. So part of the fast track environmental permitting means that we restrict our throughput to 1.5 million tonnes per annum at the back end, so through the DMS concentrator. So whilst we can build the front end, and we are at a higher crushing capacity at 3.6, we're building one DMS circuit as stage 1, and that's limited to 1.5 million tonnes throughput. We are looking at stage 2 as part of the DFS, which is putting another one of those DMS units at the back end to debottleneck that to then produce up to 3 million tonnes per annum or throughput. So we're looking at that stage. We are, in the back, I guess the back office, we are contemplating stage 3, which is then doubling that again. So what that will do for us is I need to build a resource base beyond that 100 million tonnes to start with to sustain and support that level of production. And more than likely, we'll need to see things like Planalto come into the fray. So we've got more than one operating pit running just for the complexities of moving that amount of material to generate 1 million tonnes per annum of concentrate is a very big mine. This Colina itself is already going to be a very big mine. The pit is, a kilometre long and, or a couple of kilometres long by nearly a kilometre wide and, 400 metres or more deep. So this is a very big mine, moving a lot of material. So to double that production, you need a lot of trucks, a lot of material movement. So logistically doing that out of one pit is very complex, obviously. So if and when we can prove up other deposits like Planalto, it gives options to the mining team to then say, okay, we've now got more than one mining front or more than, half a dozen mining fronts, so that we can look at scaling that up again. So we are considering it, and we're sort of playing with it in the back office, but it certainly is not part of the feasibility study that we're doing at the moment.
So I guess a follow-up to that then, do you have any exploration planned at other targets?
So yeah, look, again, my exploration team, Pedro, Rodrigo, Rangel, Bruno, Marcus and Deborah, the team on site, fantastic team. And unfortunately for their exploration side, we've been very focused on in-pit or, infill drilling for the last sort of 6 months. So we've all had to step on our exploration, aspirations to go and test these other projects. And Bruno, with his regional team, have been getting a whole lot of targets ready for us. So we do have drill-ready targets. Obviously, Planalto is one that we've started drilling on. We need to get back down to False Block and continue to grow that resource through there. We have other prospects like La Gina, which is just out to the east, or further to the east of Colina, that are drill ready. So we have mapped pegmatites with spodumene at surface. We have soil geochemistry highlighting those. So we're ready to go with those. So yes, we will be doing more exploration. We've slowed things down at the minute to take a bit of a breath. We had 16 rigs thumping away for a good 6 or 7 months this year. So everyone has been fairly under the pump, and we've generated a lot of data. We're now taking a bit of time to digest all of that, make sure we understand things at Planalto and Colina itself, and take those learnings away, so when we go and hit those other targets, we're as best informed that we can. But certainly we will be looking at doing more exploration to continue to grow that resource base.
Okay, well, Tony, I think that's it for the Q&A portion of the webinar. Thank you so much for hosting this webinar with us today.
My pleasure.
Just as a reminder for our audience, our next webinar will feature Aero Energy, and that's on August 19th at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.